The 2,000 largest businesses in the United States spend an estimated $17 trillion on buying goods and services from their suppliers. That's $17,000 billion. Typically, they take between 1 and 3 months to pay those suppliers. If we say it's an average of 60 days, that means about $2.8 trillion is locked out of the economy. Big business see it differently. They earn interest on late payment. For them, delaying payment improves cash flow and reduces their cost of capital. But in 2015, they'd be lucky to get 1% on their cash. And in contrast, many of their suppliers will be paying 20 times that if they factor invoices or use borrowing to fund their business while they're waiting for payment. Looking at this in macroeconomic terms, big business is earning $28 billion by holding on to supplier payments for 60 days. But the cost to suppliers of funding those late payments is over $500 billion. But what if suppliers were paid early? What if instead of waiting 60 days, they were paid in 10 days? Again, in macroeconomic terms, that would release $2.3 trillion. That's a huge difference, but why would big business give up their cash flow advantage? Why would they give that away? Well, they don't need to give it away. Suppose instead of paying 20%, suppliers paid 10%, and not for 60 days, but for just 10 days. And instead of paying that 10% to the bank, they paid it to their customers themselves. In other words, pay their customers to pay promptly. That would save suppliers $230 billion a year, and their customers would make over $200 billion.